All right, good morning and welcome once again to Rally Trades Morning Market Review, where we make daily profits. My name is Victor and I'm going to be your host this morning. Um, Please, I would like us to um, just gently wait for more persons to join this call so that when we start, we're not going to go back and forth, all right? Please just exercise a little bit of patience. In the next 3 minutes, so we should be able to kick off properly. And please, if you can hear me, please just help me with the notification of yes on the chat box if you can hear me. All right, thank you. Chinedu Osaji. Oh, good morning, sir. How you doing? And Thelma, good morning. All right. So just in a bit, we are going to kick off. So 1 more minute and we're going to start, please. Just 1 more minute and we're going to. Thank you. Okay, so I think we should be good to go now. Others will join us in this review. Now, basically, for us to trade effectively and without interference as much, because a lot of things contribute to the factors that move the market, that moves the market. We have constant things that are constant in the market, talking about the various levels of demand and supply. That means those factors that contribute to the movement of market. If you have more persons buying than selling, then price or normally should go up, all things being equal. And if you have more persons in the market selling than buying, price should go down, all things being equal. Principle of demand and supply, which applies to the charts clearly, is a constant. Now, there are some variables that comes to play, which are things like fundamentals, like we know. And one of the ways to be ahead of the fundamentals or to track fundamentals, you can use investing.com. You can also use forexfactory.com, which is one of the most popular. We use very easy to understand. So, for instance, today, Wednesday, October 18th, October 16th, rather, as at 7 a.m. this morning, we had CPI, that's Consumer Price Index from the for the GBP, that's the British pound. And from here, we could see that they had previously 2.2%, they had a 1.9%, and we are expecting a higher figure to be good. Um, so we had a drop 1.7%, which was bad for the CPI. Now, one of the ways you know it's bad if it comes out in a red color, means it's bad. But if it comes out in green, if we go back to yesterday, if you notice, something like this, if it comes out in green, it's good. All right. So the currency will be strengthened. Hence, um, we had this one coming out in red today, which is the British pound is going to be weak. So everything about the pound today came out bad. All right. So we expect the pound to be weak for next day. Now it's not going to last forever. It might just last for a few hours, possibly for a few days. Then the pound should recover again. Today we don't really have some major fundamentals in the market to really push the market. So we are good to go technically. But most importantly, we also have this ECB, that's European Central Bank President, Christine Lagarde, speaking around 7:40 p.m. today. Now, once the European Central Bank President is speaking, the president of Christine Lagarde, it moves the market. Jerome Powell of the Federal Reserve of America, it also moves the market. Basically, the heads of the central bank, any country, any major economy rather, not any country, please, any major economy. And these are countries that we categorize other major economies. The currencies are also under majors. Mololua, you raise your hand, and someone else raised hand. That you want to say something? You want to say something? If you want to say something, please go ahead. Because right now we're on our chat, I just want to analyze them now. Oh, okay, all right. So let's just continue then. Um, so let's start with the currency pairs. This is the USD CHF. Prior to this time, we had massive. Before now, we had a massive downward movement. For now, massive. Okay, it was ranging. Then before the range, massive downward movement for the range. Now after the range, we had a breakout. So clearly, if you see it on your 4-hour time frame, if I zoom out, you see we've had massive downward movement over time. Massive downward movement came into a range, and this range finally gave us a change of character in the market. That means price started moving to the upside. Okay. So that means we are bullish at this time. Hence, we are going to be doing more of buy than sell, more of buy than sell. Now, this trend line might not cut it much, but we'll take it out. Now, how can we join the buy? Is the buy also going to continue? How long will it possibly last? Do I have areas where price most likely might not be able to continue and reverse back to the downside? So these are things that we need to consider. So all things being equal, price keep pushing to the upside, keep pushing to the upside. It means we are still very much bullish. Now, let me show you one very simple strategy that I use to trade any market. I prefer to trade when the market is trending. Price is just moving more in one direction. It's easier to trade. But when price is ranging, and it might look easy rather, but all of a sudden price just change and it breaks out. So you are buying at support, price breaks support. You're buying at resistance, price breaks resistance. But if I have in the trending market, this is what I usually do to trade that particular market. Now, I look for what I call impulsive moves. Impulsive moves based on the candle pattern, most likely a decisive candle. You see something like this, right? This is a very good impulsive move. It means that there are a lot of buyers in the market. And what I want to do is I would like to take cognizance of the candle before it, all right, the candle before it. So this particular bearish candle, let me zoom in so that some other persons can see it. All right, so I'm talking about this impulsive move. So I look out for the candle before it, especially when the candle before is an indecisive candle. By indecisive candle, I mean a candle that the body of the candle is less than 50% of the total range. That's including the low and the high. All right. So you can see the red part is less than 50%. So I mark the high to the low. If I am bullish, I mark the high to the low and I extend it to the future. Right. So if I am bullish, I wait for price to return back to that level, then I buy. And you find out that sometimes it doesn't return back to that level. So alternatively, I also at the same time, I can also have my Fibonacci retracement from swing low. Let me zoom in. My Fib levels from swing low all the way down here to swing high down here when I notice a retracement starts happening. So I prefer trading in between the 50 and 61% retracement level, right? And some other person can prefer the 78.6% retracement level. Now I have double defense now. One of two things should happen. So the moment price can get to this level in between 50 and 61.8, this level right here, I am looking for a buy trade back to the upside. So it's either price starts going back from here or price comes lower, taps into this my zone here, and I buy from there. Okay. Now, based on the way the candle moves, you will know if you are most likely to be buying from there or not. Now, for instance, what do I mean? Now, I mean when price is coming all the way down, I hope you know there's a tendency that price can overrun this point like it did right here. So if I'm buying here, it means that I will be in drawdown until price was finally able to pull out and give me my profit. Okay. Now, in that case, how do I know if I am to enter the market? Now, you see this candle that enters this particular level of that's my point of interest. This level I want to take my buy from. That's at my 61, in between my 50 and 61.8 retracement level, my 50. The kind of candle entering that point determines if I'll buy or not. I don't want a massive and full body candle. I don't. It means there's still much more presence of sellers in the market trying to force price down. I don't want a big candle. I want an indecisive candle. You see a candle like this, a candle that the body is less than 50% of the total range, like I described earlier, right? It shows that price has slowed down. I need price to slow down for me to know, okay, it has a possibility of reversing. Price obviously did not really slow down here. So it means I will wait. Price still started to slow down from this level. It means that I can take my buy from this that candle here because of this rejection here. All right, this rejection indicates that price is now slowing down. And you can see that it just did a little bit more push there. You can see massive presence of buyers in the market. All right, it shows that now I can take my trade, but unfortunately, this zone is where I can really take my trade around the close of this candle. So anywhere around this candle, I would have entered my buy, all right, profit back into it, then finally price started pulling to the upside. So it means that price here had enough what we call liquidity in order to continue to pull to the upside. And you can see it went back to that same retracement level, this same high. Let me put it up. Sorry. Price went back to this same high. All right, this high point here, price went all the way there, couldn't really break it. It means that it will come back again to my point of interest. So if I extend this level to the future, you'll notice that the moment price tapped into it here, automatic movement, now that movement was now able to break above this high. Excellent. So was able to break above this high that I've seen here, which confirms to me that my trend is still very much active, leading to where we are right now. Okay, so this is the strategy I'm just teaching you. Now you can apply it almost to anything. You can apply it to almost any market, but just make sure you're applying it properly. So now, how do we apply to current market price for USD CHF? Given that our uptrend is still active. So two things we do. The first is you look for impulsive moves to the upside. You mark the candle preceding. So I have now I don't need a break. For instance, this is impulsive, continuous, continuous. All right. So the candle before it, I will mark something like this here, all the way here, and something like this. All right, so I'm waiting for price to tap into this level, then I continue buying. Alternatively, where did that move start from? The move started from here that gave me another swing high, right? So it means I'm going to be drawing my fib levels. I'll be drawing my Fibonacci retracements from swing low. Let me do swing low here, all the way to swing high. So remember my point of interest also. My point of interest is in between my 50 and my 61.8. Why is it giving me two different fib levels? Sorry, just a moment. Oh, my previous Fibonacci. Let me take this one out. I intended being very fast today with this review, but unfortunately, uh, but I just really hope you are getting what I'm saying. Okay, from swing low all the way to swing high. So my point of interest is actually slightly below where this level is right now. So I have my point of interest around in between my 50 and my 61.8, this level right here, right? So anywhere around this place, I can expect price to fall and then retrace back to the upside. So we'll continue buying and hopefully we break above this level and price continues pushing higher and higher. So that is what I'm expecting for USD CHF. All things being equal, even that we are still pushing to the upside. All right. So in case price comes down, now price can still come all the way down to where my low started from. Now, if price comes down and break below this my low, where I have my fifth starting from, it means there's a possible change of character in the market. So I won't be considering it as an upside, a buy. I'll be looking out for opportunities to sell. So this is for USD CHF. The same thing for USD JPY. So if we look out for the same thing we are looking out for impulsive moves to the downside and to the upside, impulsive move, consecutive impulsive moves to the upside, or one massive candle to the upside. All right. Okay. So let's backtest this guy a bit so you can see this massive impulsive move to the upside, right? So in case you notice if the candle preceding it, if I take this one and I draw from swing low all the way here, notice that price did not come back to that level. Now, it doesn't mean it can't come back to that level in future, but it hasn't. That's one. Secondly, remember we applied our fib from swing low all the way to swing high, right? And this is my point of interest where I'm waiting for price in between my 51.8 and my 60 uh, 50 and 61.8 retracement level. Notice that here price also took my fib levels, unlike USDCHF that went slightly down before going up. Here just respected my level and started pulling back up. And notice that the candle that came into that level, why I will take that trade is at that point is remember when price is approaching that level, I need price to slow down. Right now, ranging means it has slowed down. And you see this candle here, you see this massive rejection to the upside, it means it's slowing down. Now, some persons might think, okay, it's going, it can still come back in. Notice a massive candle came in there, but the moment it now tapped into it, every tap into that zone, there is a rejection. There's a rejection, significant rejection, right? So it means either from here, I would have entered my buy here, or if I miss this one, I would have entered my buy from here. Either way, it's still profitable. So I'll be aiming back for this high where price was coming from. All right. Now, just imagine how much I would have made in pips. Let's see. Let's say I took the trade even at this level. Uh, Imagine how much I would have made in pips. All right. So that is very, very massive. And USDCHF just so slightly, and USDJPY another is also slightly weightier. So I would have made some good profit. So Joseph, I think you're raising your hand. You want to say something? You want to say something? Okay. Please, can everyone still hear me? So that I know I'm not alone here. If you can hear me, just please help me by indicating hear me or yes, no. Well, if you can't hear me, you won't type it. Okay. Chinedu said yes. Okay, Temitope Akinlele, yes. Okay. All right. So I will take it, although the sample size is quite small, but I'll take it that you can hear me. All right. So let's keep going. I need significant push to the upside. Okay, significant push to the upside. This is USD JPY. If I don't have it, it means price will most likely keep pulling down, and keep pulling down. All right. So for this particular one right here, I will be picking this level here. Now, it's not like it's that strong. This level is not that strong, but it will serve because if you look at it, the moment price went up, notice that it came back, tapped into that level, and it went back. One of the things you notice when price comes into your demand zone is, or your order block is that there will most likely, most often than not, be some significant retracement to the upside or significant rejection, rather, significant rejection, right? So there will be significant rejections, such as I had here. All right. So now price is trying to come back all the way to that level again. So I'm expecting, remember, USD is still to the upside. So we want to buy, but always buy after price has come to your discount zone. So this is another discount zone. If we buy, we are going to be aiming this high all the way here. Now, don't forget, if you enter your buy, always have your stop loss somewhere below. Always have your stop loss somewhere below to avoid stories that touch. This is the 1 hour time. This is a 1 hour time frame. Now, the thing is this, I'm not shifting time frames because I can do this same analysis on any time frame. Um, for instance, I do it on 1 hour. I can do it on 1 hour and 4 hours. Then you can as well still track back to your 15 minutes time frame to watch out for that level. right? So it's still the same. You can mark it on your 1 hour, mark it on your 4 hours, and most of you, I know you like to execute on your 15 minutes, so it's still fine. But make sure you are marking those levels from a higher time frame. Make sure you are marking those levels or that level from a higher time frame. All right. Higher time frames are usually better doing your analysis than the lower time frame. Okay. So you can see that this is a very strong level that price needs to come back into in order to continue to push to the upside, right? That's for USD, JPY, and for gold. Yeah, for gold, yesterday was a massive win. Um, the same thing that I usually do, very, very simple, very, very easy. So I basically just look for impulsive moves to the upside. Um, Something like, okay, you see this one here, for instance, this one here. Now, I prefer there's no break. I prefer two or three consecutive push to the upside, or one massive, like extremely massive candle. Now, see this one here. I mark the candle before it, the high, the low, and I extend to the future. So I've been buying from here. The price tapped into it, but tapped into it. Here we had a sweep of liquidity. So that was why price did not go up immediately. Hence, if you have your stop loss too close, then price will most likely have taken you out before finally going. So it's just majorly a sweep of liquidity before going to the upside. I saw liquidity already being swept, so I entered, I think around, was it this candle yesterday? This candle here. Okay, after, that was after this one, this rejection to the upside, right? I entered here, profit back before finally giving me that push, and my TP was back to this high, and it hit my TP straight up. So you can use just this very simple strategy to get winning trades. Nothing so complicated. Now, please do not forget, if you are using this strategy and you are taking your trades, always have your stop loss in place. Always have your stop loss in place. Like I said, you can have your stop loss somewhere below, right? Now, if it's too close, there are times it will take you out. So you can just give your stop loss a little bit more room, right? So what are we expecting for gold? I've had that push to the upside, and for the fact that if you check either any time frame you check gold, you notice that gold is massively in an uptrend. The uptrend is still active. It just takes a chill pill sometimes. Now, also note that price cannot just continue going up and up and up, like that. It needs more strength to keep going up. How can you select stop loss that will not be taken out? Uh, Let me see that message. Stop loss that will not be taken out and continue. Okay, the Moody said GBP. All right, after now we'll go to US 100 and go to the GBP. Okay, so like I said, I have a technique for it. The truth is this: a lot of times you can't tell. If you just set your stop loss, if you have a fixed rule, then you're ready for times where price takes you out and still go your direction. But one of the things that I do is whenever I mark as my point of interest where I want to take my trades from, I usually plan. I don't just come to the chart randomly and look, oh, price is going down, I should sell. I need price to retrace, sell. No, I plan my trade and I trade my plan. I stick to that. Anything short of what I'm expecting the market to do before I take that trade, I don't. I've learned my lesson a lot, so I don't. So if you notice, if I open my chart history for you, you will notice I have less losing trades and more winning trades because I wait for price to get to my zone before I execute. All right, before I execute. So now this is what I usually do. Like I said it before, the candle that comes into my zone, I don't want that candle to be a massive candle. I need to see that candle slow down. Yeah, it has been mitigated already, so we can't use it right now. We look for another zone. You'll see another zone already. Six. So like I said, price came into this zone. You can see this massive candle here, right? It did not slow down. Hence, I wouldn't have entered after this candle. But this candle here showed me a bullish movement to the upside, a bullish movement to the upside, then I can enter. All right. Then I can enter. Now notice that price, if you entered, you just little profit, price struggled, came back inside. Coming back inside here, if I am already on that trade, I would hold on to see if price will come in and take me out in my stop loss. Now notice that after doing all of this stuff here, price, this small candle shows that price slowed down. So as at this candle here, I would have entered my trade already because I see a smaller candle, right? It tells me that price has slowed down for me to now enter my buy to the upside. But if it continues massively down to the downside, I'm not going to take it. Now, if I take my trade there after price slowed down, I don't expect price to still go massively inside to take me out anymore, right? So me taking my trade on this particular candle, I would have had my stop loss, somewhere where most likely it wouldn't have hit me. I didn't take the trade here. I took it after I saw this one here. All right. So I didn't take this one here. Here I took my trade. I was so busy yesterday, but I still caught this one. All right. So please just there are times where another trick to it, if you notice I mentioned what we call liquidity sweep is that at every point of interest, there can be a liquidity. That means if I have my buy here, I have my stop loss. My stop loss is also part of liquidity. Now, whatever you do, my stop loss is the opposite of my buy, which is a sell. So for you to buy something, you obviously need sellers to sell, isn't it? So price will force its way down to pick all the sell orders, then push back to the upside. Notice that it was after the liquidity sweep that price was able to go higher and break its previous high, right? So this is just the technique I use. You can try it to see if it works for you, all right? Then remember, you can also wait for retracement from swing low all the way to swing high, and you have your point of interest somewhere. Since this zone has been mitigated already, that's price has used it, you can have your point of interest somewhere around here. Remember our 50 and 61% retracement level, right? But let's now consider what I also showed us in the first place. I said I always look for impulsive moves to the upside. Now, this is a good one and a continuous move to the upside. So I look for the candle preceding it. I mark the high and the low and extend it to the future. Wait for price to come, mitigate that level. So this is the high, this is the low. I extend it into the future. So you can see that I have my point of interest are very close to each other. My point of interest, where I would like to take my buy on gold because I want to buy gold now. So I need price to come into these levels here before we can continue buying gold. Now, somebody can be asking me, can we sell it? Why we know that, oh, price needs to come there, can we sell it? Yeah, you can sell it, but selling this is a risk. But yes, you can also sell it. But make sure that if you are selling this guy, you have your stop loss somewhere above, right? So in the long run, I still expect a push to the upside. If price kept ranging at this level, kept ranging, then there would have been a problem. I've been expecting price to come all the way down to fetch more liquidity to go up, but price is still breaking higher highs, giving me higher highs. So yes, we are still massively to the upside. So that is for gold. I said we'll do US 100 before we go to GBP JPY. Where's my US 100? Okay, let me open it. Um, yeah, this is what I have. I love seeing things like this. This is massive supply dumping. Now, the direct opposite is what we can do here. If I see an impulsive move to the downside, so I mark the candle proceeding from the high to the low, and I extend it to the future. Price can potentially rally back up and pull massively downward again. Now, but the reason why I wouldn't want to sell this guy is because if you check from whatever time frame, you notice that we are still bullish at this point. Okay, bullish, massive retracement. and we are still possibly looking at pulling to the upside. But price is at a supply zone. By supply zone, I mean, see massive candles to the downside, this level here. Let's see here and here, all the way, all the way. Okay, now maybe you get more understanding. I went to a higher time frame. I went to the daily time frame. If I want my chart to be clearer, the higher you go, better it is for your analysis. Now, so why did I mark this particular level here? Why didn't I mark it from up here? Now notice that I just have one massive candle to the downside. It's good, but I need more than one. I need like two, three consecutive. So here I have one, I have two, I have three. So I look out for the one before that massive candle, which is this. So I mark from the high. I mark from the high, sorry, from the high of this candle, from the high to the low. All right. So back here to the low to the high. So I extend it to the future. Now, watch how price reacted when. So next time price got back to that level, what you notice? Sell off. Get back there, you can see another sell off. So that was why I quickly spotted it on my 1 hour time frame. All right, I quickly spotted it there. So let me take this out. So we'll take this out again. So let me just put a line there at that level. Two lines. The high and the low. Okay. So my 4 hours and especially on my 1 hour. Now that was why I quickly spotted it. So price is already inside that zone. So you can see impulsive move to the downside. So now let's see what happened. You can see these two foolish move to the upside. Excellent. Now, if I had done this, did I take that trade? If I had done this high to the low to the future, now what do you notice? What do you notice? What do you notice? Now, this zone I identified, impulsive move to the down, to the upside. I marked the candle preceding. Now, notice how price came back there. Now, remember the principle of entry. I need price to slow down, right? So at this point, I probably wouldn't have taken the trade until price slowed down after just tapping in. Then we enter a buy. Now, I wouldn't have entered here, it didn't get there, but price slowed down, so it can be an inducement to enter. And over here, though no entry. So I saw it yesterday coming down, but I did not enter. I saw it yesterday. I did not enter because I knew that this was not significant enough, and my zone is still down here. So for those who had entered the buy, you see that you still be in a drawdown right now. But if you have entered buy from here, you will be in profit, even though it is just gradually going up. Now, this tells me that price does not have enough momentum to continue pulling to the upside. Hence, I am not shocked to see price, or I won't be shocked to see price coming back there, then pulling back to the upside. All right. So this is what I'm expecting for US 100 also. Now, this is a just a very, very easy, strategy you can use to take some good trades. Right. Now, GBP, JPY, one of my favorite also. I think most of my winning trades have been on this guy. I think I've lost on this guy once since last month, just once, not just like a loss. It hit my stop loss, and but finally still went in my direction. And so that was the loss I incurred because I wasn't there to see. I just set my trade, my pending order at that level. Price came there, didn't slow down, took it out, then immediately started going back to the upside. So that was the only loss I've seen on this guy the last month. So check out this impulsive move to the upside. Now, the one that started impulsive, I wouldn't consider this guy because they are good but not significant enough. But you see this significant one, right? So can we apply the same strategy? So if I take the candle preceding it from the high to the low and I extend to the future, what do you notice? You can see that price enter that zone. If you don't take it from here, you probably would have taken your buy from here, or you took your buy from here. Either way, you end up in profit, right? So that's one. Now, price has mitigated this level already. So the principle is, if price has done it once, twice, it's good enough for me. I don't expect you to do it three times. If it does it three times, it means that if price potentially comes here again after doing it for three times, there's a possibility price does not want to go up, is breaking it and going to the downside. So once, twice, three times is just good, right? So I've had it once, okay, let's say once, price is really yet to come back to that level. So it will still serve as a good zone for me to take trade if price comes back there. So would I consider this one? If I consider it, I wouldn't consider it to be a very strong zone, but it's good. I wouldn't consider it to be a very strong zone, but it's good. So if I take this massive candle, if I take the high of this one to the low and to the future high. Now, remember, one thing that will save you, you don't want to be buying this guy if price does not slow down. So price has swept liquidity. Hence, yes, we can push this guy to the upside. So let me just even look at it. So I'm on the trade right now. I can have my TP1 here. I can have another TP right here. You can see I'm almost in profit already. So basically, if you don't want to push your lock too far, now price ought to come all the way to this level, then this level here. So you can just have your TP somewhere around here. Okay. So GBP, JPY, we are good to go. Following our simple strategy. So you would even see if it works or not, right? So we are already in profit on GJ. Very, very wonderful instrument to trade. So let's look at which ones should we look at again? Which instrument? You can practice this simple strategy on any instrument, any single instrument, and you will see how well it works. But you need to be correct in your zones. You really need to be correct in your zones. So let's see, DE40, D40. So can we do the same thing? Can we? Um, Euro USD. Mm, I'm not sure about this one, but you can see price has, trying to respect that zone a bit. Well, because D40 is, so if I look at this move and I take this guy, and I just put it here, you can see it's trying to respect my zone. So any moment from now, I should have a push to the upside, targeting this level again for my TP for D40. Um, okay, the previous candle does not necessarily need to be the opposite candle. Chinedu. The previous candle, you mean the one preceding the move? Yeah, I guess this was why you asked the question. No, it can be any bullish or bearish. It must not be a green candle, and it must not be a red candle rather. Any color. All right. The candle preceding the one that started the move. So this is the move. This is the candle before it, irrespective of the color. Mm. Then, in case price doesn't go from here, do we have another level? Yes. You can see this consecutive moves to the upside. I can have this level again. So this is one that precedes the one that started the move. You have here, yeah. All right. So all things equal, so you can have your entry. Some persons can have their stop loss or wait for price to tap in here, they start the buy again. You have some sizable account that can hold on to draw down. Mhm. So I think I have my trend line here. Yeah, I have my trend line here again. Okay. Yeah, so I have double coincidence. So it means that price might want to come and mitigate this one right here. So this is for default. So right about now, where price is currently, what do you think should happen? The buy or sell? When profit on GJ, profit is growing. A buy or a sell? Excuse me. Where is my D40? For Awojobi Felix. Oh, Mr. Felix, part of my mentorship class. Yes, Mr. Felix, you want to say something? Please, you can. Yeah, you can unmute and say something. Say what you want.
Yeah, good morning, sir.
Yes, sir. Good morning.
Yeah, please, I want you to help me check the GDP USD. I don't know whether I will still buy a bit because I got trapped on the news and I'm on loss already.
GBP JPY.
GDP USD.
It came out bad for JPY. Okay, so let's quickly look at that. All right, let's quickly look at that. GJ. Let's see. Wait, GBP USD. Excuse me. What are you? Did you say GBP USD or GBP JPY?
I mean GDP USD, sir.
GBP USD.
Yes, sir.
Okay, all right. So Emmanuel Mio says you buy for D40. If it doesn't hold, you buy from the next demand zone. Excellent, excellent. So sometimes you cannot always predict price 100%. Just that you can't always predict price 100%. So I have two zones here for D40. You can start buying from here, or you can start buying from here. Now the good news is if it doesn't buy from here, if it comes here and start buying, it has the potential to buy massively. So my profit potential increases. So even if I have a losing trade here, I can cover up for it from here if I take the buy from here. So GBP USD. Oh, yeah, like I said, it came out bad for GBP. So if you've seen that already from our Forex factory, so this morning you can see that everything from the CPI, everything about the CPI, the PPI came out bad. So we expect GBP to be weak. In fact, for the whole of today, I don't think I'm expecting GBP to, have any strength at all. I don't think it ought to have any strength at all. So if I would have taken the trade, look at this impulsive move to the upside. If I would have taken the trade and using this level here, now remember the principle. Notice that I would only take the trade on the condition that price slows down, right? And I didn't see that here. So we leave this guy. But let's see potential of recovery. Potential of recovery. You go to higher time frame now, much more higher time frame. I can see this particular zone here. So it's doing what we call a double bottom liquidity sweep, double bottom. So it's cases where price has gotten to previously, especially when you have a significant week like this, significant week. So price is doing it. And if I put a line there, you notice that the liquidity there has been swept already because it went lower and possibly pushing to the upside. Now, the reason why I wouldn't want to trust this is the news just came out and we are still fresh. Not more than 2 hours, 3 hours. So not more than 2 hours. So I'm not ready to buy this guy now. So there's the potential, there's a possibility if at all it doesn't go up, it might be ranging. It might be ranging. So it's not clear cut. Yes, it's at a support level where we can possibly take a buy from. Okay, something like this. On the condition, you see this impulsive move. This is a 4 hour time frame. They move all the way up here. Yeah, I would have been taking significant buys from here. So if I go back to my 1 hour time frame, now notice that the zone I marked, just this one, I would have been taking some buys, some buys, some buys, some buys. Now price has gone below that level. So on the condition that price comes back above this level, comes back above this level, we're going to be buying it. But yes, a buy is good now, and if you buy, you have your stop loss down. If you're on this trade, just hold on. Most likely it recovers, right? Most likely it recovers. So just one more before we call it a day. One more. Let's consider oil. Oil. Oh, Euro USD. We have not done that. Okay. EUR USD. Okay. The euro dollar. Okay, let me see. I can see some significant push to the downside for a while now. Let's see if we can create a good point of interest from our 4-hour time frame. Okay, so you can see this level here is a good one. A good one. So if we take this, sorry, if we take this level here, so the candle preceding is this, the high to the low, and we extend. Okay, so that should be a good one for us, but price has taken out that level. So if I remember, I said it's good for once, twice. If it's doing more than 3 times, it's a problem. Price did not really respect this answer. Now, if you check Euro USD, I like being on the side of the trend. If you look at a weekly time frame, what do you see? Euro USD is much more to the downside. So I don't want to be on the opposite side of the market. Right? I like following the particular trend. Now remember, I would be taking my buy if price is in an uptrend, and I'll be looking out for sells if price is to the downside. Okay, so by implication, what do I mean? I look for the direct opposite of what I've been doing before. So you can see this three push to the downside, even four, the candle preceding it. So this is what I'm going to do. Since I'm to the downside, this is what you're most likely expecting to happen. Price comes back, retraces here, and pulls to the downside. And on the reverse side, my Fibonacci, because in case it doesn't get there, my Fibonacci from this swing high to swing low, all things being equal, if this retracement happens, if it happens right here, then my point of interest, remember, in between my 50 and my 61.8. Okay, so this becomes my point of interest to take my trade back to the downside. Okay, so this is what I'm expecting for Euro USD. So always plan your trade and trade your plan. Right? I think we'll call it a day from here, or let me just quickly look at oil before we just wrap this up. So I expect price to do this for euro dollar here and push back to the downside. And on the condition that it does not have enough liquidity, it can go as far as here before pushing to the downside. So in this case now, I don't have one um, move. I have two different scenarios that can possibly happen here. So how I approach the market now is entirely up to me. So remember the principle. I don't enter here for a sell if price doesn't slow down. Right? The same thing for here. So that's the condition for which I will go into the market at that moment. And in case I'm busy, you can set your pending orders, right? Hoping to catch the move. So that is for the euro dollar. I hope that suffices. Then the last one, or let's see, the okay. So what's happening on the? I'm sure nobody's on that trade. Where's my oil? I think I had all of this at this point here. Something is wrong with my chart. Okay. I need this one. WTI. So you can see some significant push to the downside for oil. Now remember that if I was having my buys at this level, if I was having my buys at this level here, um, price has bought once, mitigated that level, taking it out. But now the opposite is what I'm seeing. So it's a sell, and I'm seeing this massive dumping of price here. So the candle preceding it is just a small candle. Okay, so hit here and continue to the downside. I have a massive imbalance here from where price currently is. Where price currently is right now, I have a massive imbalance here. That price needs to fill before it continues. And if I use my fib levels from this, because price broke this structure right here, and if I start from even here all the way here, so my point of interest is at this level. This is my psychological level also, okay, to take my trade from. So remember, the way price behaves around that level determines if I'm going in at that level or not. Okay. So thank you very much for your time this morning. I really hope you make a lot of money. My profit is massively increasing on GK. I really do hope you make a lot of money today based on this review. And also, I hope you've gotten one or two things in order to be able to take trades yourself. Um, my name is still Victor, and I'll see you. Remember, we have lots and lots of events coming up. All right, so please contact your account managers, be part of it. I think I'll also be having another event very soon by next week. So contact your account manager, be part of it so you can maximize profitability. All right. Thank you so much. All right. Enjoy the rest of it.